Zach, let's talk about where things stand right now, because this is a pretty incredible run. Of course, the last private round funding for DoorDash was at $15 billion. I mean, we're now talking about a range of 145 to 150. Certainly feels like investors are really bullish on the huge growth we've seen in the food delivery service this year. Emily just alluding to the fact that, yes, the company did post a profit in the second quarter, but this is yet another one of those tech companies that's yet to post an annual profit here. But it feels like investors are sort of running ahead on the expectation that this momentum we've seen this year in this service space is sustainable.
Yeah, we're going to be discussing this IPO with two different analysts that have two different opinions on it too. When we look at it, it's kind of tough to compare it to some of these other IPOs we watched, and especially in the big tech space last year. When you look at the valuation here, that's definitely going to be the thing that people are going to be debating where this finally opens to trade here at Aikiko. But right now, 145 to 150, just want to compare it to that 102 price in the IPO. When you look at that versus the sales in the last full year, comparing it across some of the other companies that we've seen go public recently, it's already above those. Keep in mind, Zoom, when it was going public, was profitable, and that was something that could justify why we saw such a high valuation on that name. DoorDash, as Emily was talking about, was able to do it for a quarter and then immediately not profitable again. The expectations there to maintain profitability is that it's going to need to grow their global footprint here. And it's obviously one of those things where it's very hard to distinguish your brand. I admittedly used DoorDash last night. We got sushi here in the Guzman household in Texas, which was a questionable decision. But when we think about differentiating your product versus the Grubhubs of the world, the Uber Eats, it's very difficult to establish that brand portfolio. We're going to be discussing it a little bit more later on in the show. But I think a key piece of this is some of the partnerships that DoorDash has been able to build, as well as perhaps the overlooked opportunity here in the retail space. They partnered with convenience stores to start moving into that direction. We know how big grocery deliveries become in terms of that opportunity. So there's a lot of different pieces here, but we're all excited to see where this actually starts to trade. But at these prices, just when we're talking about how it compares to those other tech companies, already very expensive.
Well, and on the issue of market share and just how competitive things are, DoorDash, as Emily noted, certainly has the largest market share right now, has been able to surge ahead by really focusing on the suburbs and the smaller cities. But we're going to be talking about this throughout the show. I want to bring in a guest who's very familiar with the platform, the founder and CEO of Marqeta, Jason Gardner. I think he just walked away there. Do we have him here? Jason, are you there?
Yes, I'm here.
Okay, Jason, back in the chair there. Jason, it's good to have you on today as we wait for the opening trade on DoorDash here. I guess a key question a lot of investors are going to have moving forward. Sure, there's a lot of optimism about the growth in this food delivery space right now, given what we have seen throughout the pandemic. How sustainable do you think this is going to be post-pandemic?
Well, thank you for your interest in Marqeta. I think we're all experiencing the pandemic at the same time around the world, and food delivery has become a safe and convenient way to get food. So we've all, whether it's DoorDash, it's a company Marqeta supports. Marqeta also supports Uber Eats, Instacart, Favor. This has become part of convenience. Like, Zack was talking about how, he ordered sushi to his family. We're just not going out. We're fundamentally changing how we're actually eating dinner or eating lunch. And it's leveraging companies like DoorDash, who, as we've seen, is the clear market leader.
And Jason, that obviously is the big question here is, we've seen growth that is, leading DoorDash to profitability here because a lot of people are staying at home and don't want to go out to restaurants, or restaurants aren't even able to open in some areas right now. And I guess the question becomes whether or not that trend teeters off after things start to reopen into 2021. Obviously, DoorDash has been spending quite a bit of money here to steal market share away to become the leader here in the U.S. But that's the big question here. If restaurants do, start to see customers start to come back in person, what kind of opportunity still exists here with some of these delivery names?
Well, the delivery companies, even before the pandemic, were growing quickly. So we're now seeing in a COVID world where people have become very used to ordering food in. For instance, Marqeta was predominantly an in-office culture. We've now moved to a culture where you can live and do work as in service to Marqeta and service to really focused on whether it's at home or in an office. You can really go wherever you want. And we've seen the massive growth in food ordering, obviously the DoorDashes of the world that have experience. But again, Marqeta and how even I order has changed fundamentally. I think it'll be a hybrid of both. But again, these companies grew pretty quickly even before the pandemic.
And Jason, we should point out as we keep one eye on the live board there at the New York Stock Exchange, we're now seeing shares of DoorDash indicated to open at 150 to 155. And a reminder to our viewers, the IPO was priced at $102 a share. So we're just surging ahead before the shares begin trading. But let's get back to Marqeta's growth here. I mean, you talk about these partnerships that you already have in place with a DoorDash as well as a global partnership with Uber. How are you seeing the growth potential in the payments space, given the space or given the growth that you've seen in food delivery, as well as these other services that a company like Uber is now offering?
Yeah, so Marqeta works in a number of different verticals. Commerce disruptors, where on-demand services is. We also work in digital banks, large tech companies, large issuers like JP Morgan Chase. Specifically Uber, we've been supporting Uber Eats for a long time now. Now, as we've announced a global partnership with Uber, they're leveraging our critical infrastructure to build card products. And Marqeta is an open platform, so companies can build Visa and MasterCard card products. They can be consumer use cases. They can be commercial use cases. So what DoorDash or Uber Eats use us is so their drivers, when they're buying that food at the point of sale, Zack, like when you ordered your sushi, that allows them to really do order matching. That card is swiped. There's a message generated at the point of sale that's then delivered to DoorDash. Is the driver on shift? Are they picking up the right order at the right time for the right amount? Once that phone has been tapped or that card has been swiped or inserted, and that allows them to scale and grow while having operational efficiency and reducing fraud at the point of sale.
And Jason, I'd be remiss if we didn't ask about your plans for Marqeta here, because there have been rumors about you sort of looking into the potential of listing or consulting with the likes of Goldman Sachs, as well as Morgan Stanley. We have seen some very aggressive pricing and huge pops, especially this year with tech IPOs. How are you looking at the overall market environment as you look to take that next step with Marqeta?
Well, Marqeta, we believe, is a pioneer in issuing and processing. Over the past 10 years, we've truly built a great business operating in the US, Canada, Europe, in Asia, starting with Australia. We're really just focused on building and scaling our business around the world. Whether we're going to go public or not to go public, it's something that we're just not talking about publicly. We're really just talking about what we're doing and how we're servicing businesses and really just scaling and focusing on everything from hiring and new countries. Really, our goal is to issue a card on every continent and just laser focused on that.
All right, the CEO and founder of Marqeta, Jason Gardner, appreciate you taking the time here to chat with us today. Be well.
Thank you so much.